All right, welcome to AI Explains ICT. Today, we're shifting gears and diving into the world of stocks, specifically looking at what ICT calls mega trades. We're breaking down the core content from month 11, episode 3. Now, this is a very specific, almost checklist-style strategy, so you'll probably want to grab something to take a few notes. Let's jump right in.
Think of this whole strategy like a funnel, okay? We're going to break it down into 5 key parts. We'll start way up high with a big picture view of the market, and then we're going to systematically narrow our focus step by step all the way down to a very specific trigger that can signal a huge move in a stock. So first things first, before we can even think about finding one of these trades, we've got to know what we're looking for, right? What exactly is a mega trade? Let's lay that groundwork.
According to ICT, a mega trade is the exact opposite of a day trade or a quick scalp. We're not talking about in-and-out moves here. These are significant, long-term positions that you plan on holding for 6 to 9 months, maybe even longer. The whole point is to catch a massive, sustained price move by piggybacking on a huge wave of institutional buying. You know, the kind of buying that takes months, not minutes.
Now, if you're coming from the Forex world, this is a really big deal. Stocks play by slightly different rules, and one of the biggest ones is earnings reports. See, in the stock market, these quarterly reports are a massive deal. They happen about every 3 months, and they can create major turning points for a stock. So lining up our analysis with these earnings cycles is absolutely critical.
And then, on top of that earnings cycle, you have to think about seasonality. You know, the stock market isn't just random chaos. It tends to follow these broad, general patterns throughout the year. And a key insight from ICT is that the really big, powerful buying opportunities often pop up in the fall. We're talking September, October, and November, right as big money funds are getting positioned for those big year-end rallies.
Okay, so we know when to start looking. That's our timing framework. Now let's add the next layer to our funnel, which is making sure we are aligned with the overall market. And this is so important. A really strong stock can go up on its own, sure, but it will absolutely explode higher when the whole market, the S&P, the NASDAQ, the Dow, is moving up with it. It's like adding rocket fuel. We aren't just looking for a good stock, we're looking for a good stock with a powerful wind at its back.
And ICT is the perfect way of thinking about this. He says you want to be a fish swimming with the current, not a salmon trying to fight its way upstream. I mean, it just makes sense, right? Trying to fight the entire market is a losing battle. For these mega trades, we are pretty much always looking for buys, because over the long run, the stock market is built to go up. Our job is just to find the moments when that current is flowing the strongest.
Okay, so we know when to look, and we know we need the market on our side. The big question now is, what stocks should we be looking at? Out of thousands of choices, how do we find the real gems? This is where screening comes in.
This little diagram from ICT is basically our roadmap. It shows you the whole process, from start to finish. You can see it's a loop. We start with the timing, those quarterly earnings and seasonal patterns. Then, we make sure the market direction is bullish. And from there, we start screening for fundamentals and relative strength to find the actual stocks. Each step gets us closer and closer to a trade.
And this is really the heart of that filtering process. The goal here is to find the absolute strongest of the strong. So, you start with a bullish overall market, then inside that market you find the sectors that are doing the best, then within those sectors you find the strongest industry groups, and finally, inside those groups you pick out the individual stocks that are leading the entire pack. See how we're just stacking the odds in our favor every step of the way?
Look, you can't just go through thousands of stocks one by one, right? That's impossible. That's why you need professional-grade tools. ICT points to Investors Business Daily, or IBD, as a fantastic resource. It basically does all the heavy lifting on the fundamental side for you. It sorts stocks by things like earnings growth and relative strength, and then gives you these curated lists, like the IBD 50 you see here.
Okay, this is it. We've used our funnel to build a watch list of superstar stocks. Now we get to the most crucial piece of the puzzle. This is what ICT calls the silver bullet. The one technical signal that shows us exactly where the big money is quietly buying up shares.
And that signal is called SMT divergence, which stands for Smart Money Technique. This is what happens when the major stock indices, which almost always move together, suddenly get out of sync. So imagine the Dow and the S&P 500 both dip down to make a new low, but at the same time the NASDAQ refuses to go along and actually makes a higher low. That little disagreement,
That divergence is a massive clue. It's like a crack in the surface of the market, telling you that even though things look a little weak, smart money is secretly pouring into tech stocks.
And this right here, this is the secret sauce. This is the whole thing. While that SMT divergence is happening between the indices, you go to your watch list of fundamentally strong stocks and you look for one that is also refusing to go down. You're hunting for a stock that makes a higher low while the rest of the market is weak. That is the institutional footprint. It's the market screaming at you that big players are accumulating that stock.
Okay, check this out. This chart of Facebook is a perfect example. The green line laid over the top is the Dow Jones Index. Now look right here in April. See how the Dow makes a very clear lower low? That's weakness. But during that exact same time, look at Facebook. It absolutely refuses to follow. It carves out a beautiful higher low. That's it. That's the institutional footprint, a clear sign of incredible relative strength. And the result? A massive rally of $24 per share. This is the exact pattern we're looking for.
Okay, theory time is over. We've got the framework, we know the signal. Now let's put it all together and see how this works in the real world with a few case studies straight from ICT himself.
So how do we actually use this checklist to find a real live trade candidate? Let's walk through the steps and see it in action. First up, a company called Towel Education Group. So over on the left, you can see it was ranked #1 on the IBD 50 list. Boom, fundamental check, passed with flying colors. Now look at its chart on the right. During that period of SMT divergence, while the broader market was getting weak, Towel just went sideways and put in a very clear higher low. That's our technical trigger. The result was an absolutely incredible run from about $100 all the way up to $150.
Here's another fantastic example. Activision Blizzard, ticker ATBI. And again, look at the setup. During that same SMT divergence, while the market was weak, what was Activision doing? It was just consolidating sideways, right near its old highs, and it printed that all-important higher low. That is a classic signature of accumulation, and sure enough, the stock then took off, rallying from around $49 up to $62.
Now this is super important. You can't just buy everything on the list. You have to be picky. This slide shows a perfect contrast. Over on the left, we have PayPal. It was a valid setup. Why? Because it was consolidating and it made that crucial higher low during the SMT divergence. But on the right, look at Lumentum. It was on the same fundamental list, but it made a lower low with the market. That fails our test. It's an automatic pass. The rules have to be strict. So let's just boil this all down to the key takeaways. First, mega trades are long-term. Think 6 to 9 months. Second, you time your entries using earnings and seasonal patterns. Third, you always swim with the current of the general market. Fourth, you use fundamental screening tools like IBD to build your watch list. And finally, the silver bullet, the key trigger, is a top-tier stock that makes a higher low while the indices are showing SMT divergence.
And that really wraps it up. The big idea here is that institutions can't hide what they're doing. They leave footprints all over the charts, and this framework gives you a map to find them. So I'll leave you with a question. Now that you know how to spot this institutional footprint, what stocks are you going to be watching for the next big seasonal shift?
Hey, if you found this breakdown useful, do me a favor and hit that like button and be sure to subscribe for more deep dives into ICT's material. If you have any questions at all, drop them down in the comments below. A real human is there to help you out. Until next time, safe trading.